What is up, y'all? So today I'm gonna be breaking down the trades that gave me a percent of 6.25 for the week. I took two trades, one being GBPCAD and the other one being EURJPY. Let's start off with GBPCAD. That's the one I took on Monday. So basically, how I always do, I always analyze from the week. Make sure it's bearish bullish. We were bullish. Daily, we were bullish as well. 4 hour, we were bearish. We still have two time frames in sync, so we start our analysis. For the weekly, we were at an area of interest. We had a rejection candlestick. You guys see this big wick, and we also rejected previous structure. This was my higher high. This was my higher low, meaning the previous elbow, this is one elbow, and the second elbow will be my previous structure. That being said, this is my previous. You guys can see we wicked it. So that was a rejection off of there. So we had a weekly area of interest, we had a rejection candlestick, and we had a weekly rejected previous. We also had a round psychological inside the area of interest, so we noted that down. That was it for the weekly time frame. We now go down to the daily. On the daily, we also rejected a area of interest. As you guys can see, we also had a big wick. Basically, what I was anticipating was we filled up that wick for the new week. This was a Friday candlestick, so basically we were supposed to fill that wick. Obviously, it happens, not all the time though, but that's why you do your analysis, and then the trader gives a good percentage of a trade, then you take it. So basically for the daily, we rejected an area of interest, and we also have a rejection candlestick. There being four, we were already at the 20, 30, 40, 50, 55, 65, 75% trade. That was it. That was all I could find for the weekly and daily. We were at a 75. So now all I was waiting for was a 30-minute shift of structure. So then I'll go down to my 30-minute. We ended the week off with this being our lower low, this being our lower high. It looks so, yeah, it doesn't really look that, it does not look clean, but that's why if you need to basically go back to find out if you're bearish or bullish in here, then you can do so. Obviously, I kind of already know with practice in the markets, and a lot of time in there. So basically, right away, I noticed that this is my lower high, lower low. We're bearish. So basically, as you guys can still see, we're still bouncing off this area of interest right here. So basically, I'll wait for London to hit, London session, and I was waiting for us to break above. We broke above before hitting London. Just because we broke above, as you guys can see, we broke above right here. Yes, we could have entered right there, but with the honestly, we probably would have hit break. We probably would have hit stop loss, depending on your amount of pips. So, just because it was before London, the strategy that I use, we have to wait till London. So yes, I seen it broke, but I didn't enter. I let it keep playing, and just like that, the next candlestick was a big one that basically brought us back down to being bearish. So then we were now waiting again for us to break bullish. Okay, so now this was our higher high, this is my higher low. So now we still broke before London. So now what I was waiting for is for us to come down and have an engulfing or entry signal. We came down, it's still before London. We came down. We didn't have a rejection. I mean, we didn't have a morning star or a engulfing, so I didn't. So what I was waiting for is I'm gonna see if we break again. We will break structure again. We're now in London or pre-London, so obviously as you guys can see, we did break above it. I honestly look at the markets 30 minutes late. Basically, my preferred entry would have been once we broke our higher high, being this candlestick right here. As you guys can see, we closed above it. That's where I would have entered. Obviously, I ended up looking at the markets late. I ended up looking probably like after it closed, probably like 15 minutes, 14 minutes after. So I ended up entering. Basically up here. So we then place our stop loss at 35 pips. Since GBP sometimes moves fast, which, let's just say I entered right here and it could have pulled back. Since it moves fast and it has kind of big candles, then we could have probably hit stop loss. Obviously, we didn't even go into drawdown, which is good. But yeah, and then after that, we just let it play, and we have a risk to reward of 2.5. I had entered this trade with 1.5. I risked 1.5% of my account. So basically, I did a risk to reward ratio of 2.5. So that gave me 3.75% for this trade. Now, Euro GBPY, Euro JPY, yeah. This was the next day. So basically, I did my analysis. The weekly, we were bearish. Daily, we were bearish. And then 4 hour, we were bearish. This being my higher high. This was my higher low. We obviously broke under. So we were now bearish during the time of basically going into Tuesday London session. So for the weekly, we were at an area of interest. This candlestick, this is our area of interest. That was it. That's all I had for the weekly. So then for the daily, we were at an area of interest. This candlestick, this is the Monday candlestick. We entered off of Tuesday. We had a rejection candlestick, as you guys can see, because we basically rejected this area of interest. We had wrong psychological being at 163. So then we look at the 4 hour because that's all we had for the daily, and on the 4 hour we had a rejection candlestick, which was this one right here, the engulfing. We also had a 4 hour pattern, which was the head and shoulders. This being the head and shoulders. As you guys can see, we broke it. So basically, this is a right head and shoulders. This counts as a head and shoulders. So now we're basically just waiting for it to have a little pullback to the neckline. That dotted line being the neckline. So then we basically just wait till London session, go to the 30-minute, and basically we were bearish. This being the lower low, this being the lower high. We were basically waiting for a engulfing or evening star, and right about 1:30 p.m. PST, basically we had that engulfing, and that's where we entered. I guess you could. This is why I say wait for London session before you guys could. Well, my strategy, the strategies that I use. Basically, I wait till London session if I could give a better clean entry, because as you guys can see, we have an engulfing right here, another engulfing right there, another one right here, one right here, and one right here. You guys can see that we still pulled down, but we still came all the way up. We now have a good engulfing. These engulfings are not even at London, are not in London session. This is what I mean by you have to wait. Be patient. Because once you enter London and you're watching this trade, you guys can see that we had a bigger pull back up and we had a clean entry signal, which was right there. And for us to hit a 2.5 risk to reward. On this trade, I only risked 1% of my account, basically giving us a 2.5% on this trade, meaning for GBPCAD and EURJPY, basically we got a 6.25% on my account for the week, which is honestly super good. So then, little quick advice. Just because we had these big 3 candlesticks going up does not mean your trade doesn't it's not gonna basically respect that zone that's a resistance and go down. Like when I was ready starting to trade, basically let's just say right here we got our engulfing. I most likely would have entered right there. We then would have came up, stop loss would have probably most likely hit, and I would be like, oh, this trade is basically gonna take off already, like to go to the upside. No, as long as your 30 minutes, as long as your 30-minute lower high is not broken, this trade will still be good to take. So you just gotta be patient and wait for that entry signal. This one was good because honestly, these ones right here, they didn't even reach the previous structure of the 30-minute time frame. So then, you guys can see, yes, we're not right on it, but we're close to it. So on this one right here, you guys can see that we just basically have to be patient to get the perfect entries. Now, let's just say we were to break over this one, I most likely would not have been interested, and I probably would have basically wait for the daily candlestick to close to then see if we're still at this area of interest and then if we're south. Also, one thing to keep in mind, just because we break above this doesn't mean we could break, basically having a new higher high, obviously having a new higher low, creating a new higher low, creating a new higher high, and then breaking structure on the higher low to then basically being bearish again, and that's where you'll enter and it could go down. That could also happen. We could have basically on this one had a more basically pull back to the area of interest to then have a break. Basically we would have broke above this and would have broke above the higher low. We basically could have went bullish to then go bearish over here and then went down. That's also something that could have happened. Obviously this one was a good perfect entry signal, so we took it. But yeah, so that's how I made 6.25% on my account. I hope you guys enjoyed.